Alright, let's go over the trades I took this week, why I lost, and my future weekly bias. And right here, we got a new microphone. So let me know down in the comments below if you guys like the new type of audio. But yeah, let's get into it. So this week I took two trades. I took two-ish trades. One of them was a break even, and then one of them was a loss, and from a revenge trade, following a break even trade. So on Euro JPY, actually, oh fuck, how am I gonna do this? That was right here. Yeah, it was right here. It was off. Where the bro, I keep losing. Okay, so my bias for my first trade was we're just taking out this level of buy side liquidity, so I wanted to see price continue lower. We had also at the same time filled a full 4-hour fair value gap, so I just wanted to see price reverse off that. After that, we had a breaker structure. Now this was the first tell that price wasn't actually going to go that much lower, because as you guys can clearly see right here, the 4-hour break, we don't really get much of a heavy displacement. In fact, we just sweep the lows of that 4-hour candle and then we just close like above. So that should be my first sign that we're not going any higher. Right, the second thing we should have realized is with this 4-hour fair value gap, we were clearly respecting it all throughout here. As you can see, we don't actually like close below it. We might work at the bottom of it, but throughout these multiple 4-hour candles, we never broke below it once. So that should have been a noticeable thing. So 4-hour price action swept and fair value gap held consistently. Right. After we see that, we can scale in a bit. We can see that, cool, we got a 4-hour break right here. And honestly, I was looking to target these fair value gaps down here, these 1-hour fair value gaps. I thought that was a decent target in my opinion. But yeah, basically, I scaled in some more. Remember, this thing's a 1-hour fair value gap right here. I scale in, I see we get an internal sweep right here. And so I think this whole low that it displaced past is a breaker block. So as soon as price came into my 1-hour fair value gap, I sold straight away. I pressed sell straight away. I didn't even wait for, bearish confirmation. Now, that might have been bad for me, and I think that's what I should implement, because those are my favorite type of entries, when all of the time frames are in your favor. But we didn't even get like a 5-minute break, 5-minute fair value gap. And as you can see, we got whatever the fuck that was. But yeah, so that was my bias, and now I'm going to show the right bias. So if you want to see the correct bias, we have to scale out a bit. And right now we're in the 4-hour time frame. You guys can see right here that we have a 4-hour fair value gap, and we have this level of sell side liquidity right here. So we're clearly inside of a market maker buy model with our original level of buy side liquidity up here, and we could take profits at draws on liquidity over here, at the 4-hour fair value gap where I thought we would be reversing off. And this is the first draw we need to look at. This one right here, we can remove all of these, but we'll keep buy side. But the main draw that we need to focus on is this one right here. So obviously in the market maker buy model, change the character, displacement to the upside. Obviously, this is the first tell that we're having a good trade as well. We're out onto the daily time frame. You can clearly see that we've broken structure to the upside on the daily right here. As well as I learned something from another video. If price is going to take out the previous daily low right here and then close extremely above it, that shows strong confirmation that price is very bullish. So yeah, that's another tell. You really got to there's always like a pattern or a story to be told with price action, in my opinion. But yeah, we'll say high time frame market maker buy model, right? You can clearly see there's a level of sell side, fair value gap, and our original level of buy side liquidity. We've got daily breaker structure plus bullish price action with that previous daily low sweep. Now, I don't know about you guys, but I trade something called remanipulation, market maker buy model remanipulation. Now, what that basically means is, in a market maker buy model, after price hits its first take profit at a draw on liquidity, it looks to remanipulate a level of liquidity before it extends higher. So as you guys can clearly see right here, after we take out this level of liquidity, we see, what is this? Monday at the 18th of March. This is a level of sell side. And we hit it on Tuesday. So what is this? Sell side liquidity, previous daily low. Now, if you guys remember, what happened after the last time we took out previous daily low? Big displacement. We create more previous daily low sell side liquidity right here. Big displacement all the way up to buy side liquidity and so much further past it. So unfortunately, this was a trade that I did not catch. But if I literally flipped the coin 50-50, I would have, bro, whatever, man. But yeah, anyways, more confirmation. We got a 1 hour break to the upside. Scale into the smaller time frames. You can clearly see that we have a 15-minute fair value gap right here. I could have entered on that. I could have pressed buy here, taken a take profit here at this 15-minute fair value gap or whatever. Probably would have got stopped out at break even, but at least my bias was in the right direction. Now, I traded this live. This wasn't even news. This was just market manipulation. Like, this just shows these concepts work, because you don't usually see a candle like this if there's no news. When you see the market move 97 pips in one candle when there's no news, it's when the market is being moved by the bank. It's when the market movers are in the market and they're dumping the money into the market. If you guys watch my video that I'll pin right here, we watched this play out live, and the first thing it did was dump to the downside and take out all of people's shorts, and it distributed all the way to the upside. So this was clear market mover manipulation. And yeah, that's the first trade I took this week. It's a very clean trade I could have taken, but I'm not a bank, so I probably would have got stopped out here if I was in longs. But other than that, it's very clean price action. And then coming on to our second trade of this week. Now, this is a trade I definitely should not have taken. I know I shouldn't have taken this, but yeah, you live and you learn. That's a shit saying, but I shouldn't have taken it. Anyways, we got this 1 hour fair value gap right here. So I was like, oh, bro, this 1 hour fair value gap, price is literally going to reverse off this. No, it's not. Like, come on now, bro. What I've been trying to learn more about is external and internal liquidity. So if price targets external liquidity, which is a level of liquidity, price is more likely to go to internal liquidity, which is known as a fair value gap. And if price retraces into internal liquidity, it's more likely to target external liquidity. So the best future thing, sorry, I'm going on a bit of a tangent here, but we'll get to the trade that I take. The best possible thing I see happening for a possible entry this week on AUD, USD, I want to see price come up and take out this drawn liquidity, fill this internal liquidity, and give me like a market maker sell model. That is the most high probability trade I think I could look for this week. And I pray that I get that, because I'm be so confident price is going to target this external liquidity, or at least the previous weekly low from that. That's going to be a beautiful trade if we can receive one of those this week. But yeah, my trade that I took on AU, it wasn't high probability. I feel like the best. No. So yeah, anyways, we had this 1 hour fair value gap. We got a 15-minute break to the upside right here, and then we had a 15-minute fair value gap right here. Now, I scaled in and looked for a fractal entry. If you guys don't know what fractal means, it basically means an entry inside of an entry. But yeah, I entered after we took out more internal sell side liquidity on the smaller time frame, such as the 1 minute. We had displacement past this high right here, which created a breaker block. And then we have a small little fair value gap right here where I entered on, stop loss at this low, and guess what happened? Got stop punted. Now, it's trades like these where you just know, it didn't even go close to my take profit. It didn't even manage to like break past this high. This just shows you that price wanted to go lower, as well as, bro, the overall trend is just super bearish. Like, how are you buying in a trend like this? This is obviously a lower low, and we're clearly in a downtrend. Me personally, I was looking to catch a retracement, but come on now, you don't want to take retracement. You want to take trend extensions, right? You need less probabilities to take them, and there'll always be bigger and faster moves. Reversals are okay, but retracements are not. A reversal is, in my opinion, if you get a 1 hour break to the upside, and like you give time and price to like show you that price is actually starting to respect that reversal trend by holding fair value gaps and continuous breaker structures on all time frames. But you can't just expect price to reverse after holding a 1 hour fair value gap and breaking structure on the 15. Like, especially if there's external draws on liquidity below your if there's going to be external draws below, they're much more likely to get hit like that. So realistically, a better trade would have been after price had taken out this low and after price had shown us market structure that was actually respecting itself to continue bullish, then you might be able to take a trade. But yeah, those are the only two trades I took this week. I remember I literally, I watched one of these trades play out live, and this is one of the best trades I've seen this week. Unfortunately, I didn't enter just because of, I feel like my edge really needs refining, man. Like, I'm given really good high probability trades sometimes, but my edge just needs refining. Now, this trade is sort of similar to the AU trade, but it's sort of not. It's basically what I tried to do on AU and what influenced my AUD USD trade. Because remember on the AUD USD trade, we just came into the fair value gap. Let's pretend it's right here. The fair value gap's right here. And then I wanted to see it reverse, right? On this trade, price just comes into this 1 hour fair value gap and then it just reverses. Now, obviously, it's much more complicated than that, and there is clear reasoning on why it happened. But I should have realized I should have taken this, man. This was a beautiful trade. But anyways, we can clearly see that we're inside of a downtrend right now, clearly making lower lows, lower highs. We have a clear change of character right here. We have that clear 1 hour fair value gap right up here. But also, this is why, like, I'm brain dumping. I'm not gonna lie. I'm yapping. I'm brain dumping. But it's whatever. It's my channel. If you don't want to watch, you can go fuck off and watch some nah, it's whatever, bro. Alright, anyways, so we got accumulation right here. This is quarterly theory, by the way. I like quarterly theory. We have this level of sell-side liquidity. We manipulate the low right here, and then we distribute. Accumulation, manipulation, distribution, right? Simple as fuck. Everybody knows what that is. But yeah. But anyways, so price comes up into this 1 hour fair value gap. Now, this is a prime trade for me. I'm a London trader. I don't trade past London. But yeah. Anyways, price comes up into this 1 hour fair value gap. You can clearly see that we break structure to the downside on the 1 hour right here. And if we scale in, this is where you can get a very, very good entry. Now, in my opinion, I think the 15-minute is more powerful than the 5-minute. But you don't always get an entry like on the 15 like you do on the 5. Like, the 5-minute gives you much more opportunities. But anyways, enough about that. Here we have Asian session. Now, I like to trade off liquidity. I like to trade off liquidity being taken. And as you can clearly see right here, we have the Asian low being taken out right here. And then after we take out the Asian low, we come up and we take out the Asian high just at the start of London session. Now, to be fair, on this day we did have news. I think it was like an hour before this trade. But anyways, clear Judas swing. We were clearly bearish. This is what I mean about reversals. On the other trade, price just came into the 1 hour fair value gap, broke structure on the 15-minute, and then I expected it to reverse. This is a much better example of a high probability reversal. Price comes into a fair value gap, respects it, doesn't go above it, it feels like 50% of the fair value gap. We get a high time frame breaker structure, which is the 1 hour. We get liquidity validation by a Judas swing. And then after the Judas swing, if we scale back out onto the 15 minute, we get a breaker structure to the downside right here. And then we also get a 15-minute fair value gap. This was at 9 p.m. I'm always at the charts at 9 p.m. I literally remember watching this trade play out live. But you know what I said? I said, when price comes all the way up to where this red line is, because I was using silver bullet. Why was I using a breaker block? Why didn't I just enter off a fair value gap? I said if price comes up to the top of this fair value gap, I'm going to enter. Now it did have some reasoning to do with the risk to reward, because this was my first take profit and my stop loss was here, but that's still a fucking good trade. I think it might have been here or something. It might have been that. That's why I had my thing there. But anyways, I missed a beautiful fucking trade. Do you guys see this? 200 pips. Who has this type of confluence? Who's catching 200 pips? Who's catching 200 pips off a 1 hour fair value gap, a 1 hour break, and a Judas swing? Who was the last trader you saw who's catching 200 pips off a Judas swing? Everybody's a fucking scalper or a swing trader. Most swing traders, sometimes I'm out here 200, but 200 pips is fucking crazy. And I literally watched this play out live, and I didn't trade it. I don't know why. I think my edge needs refining, but this was a fucking class setup. We had good targets as well. We had this big 4 hour fair value gap. We had previous daily low liquidity right here, and like right there, bro. All of these draws get hit. I think this might be one of the best trades I've seen in terms of clean price action, in terms of just diversified concepts and strategies, and like the overall risk to reward is just crazy. But yeah, if it wasn't bad enough, I could have done something called the true open. Now you only want to buy above the true open and sell below the true open, and the true open is right here, 9 p.m. when price opens right here at 9 p.m. the London true open. Now I could have easily entered after price displaced, even though I don't really like trading after take profits have been hit. But either way, if we scale down onto the 1 minute, come on now, we see price comes up, it fills that 15-minute fair value gap. Look at the precision of that true open. That's the cleanest true open I've ever seen. You could have added one there, you could have added one right there, you could have added another one right here after price broke structure. Brother, this is how you make like somebody's yearly salary in one trade. If you can capitalize off catching and just recognizing these insane, just crazy, like if you capitalize the chance to catch these type of trades, bro, this is how you make like financial freedom, bro. 26 risk to reward. 26 risk to reward, and you're not even holding it to the bottom. 50 risk to reward, eh? Now I'm not saying you're going to be able to catch trades like this every day. It's not very often that you're going to catch a fucking 44 risk to reward. But imagine if you were funded on a 100k account, you catch that trade, mix them with the 9 risk to reward, mix them with all the other ones, the original entry. Bro, you're making somebody's yearly salary in one trade. I'm not saying that this is easy to do, but I'm saying if you can train your eye, refine your edge, and just practice the good habits and practice understanding and knowing what you're looking for within these markets, you're gonna be so up, bro. You're gonna be so ahead. You're gonna be so fucking. You're gonna be. It just pisses me off that I didn't catch this, man. But yeah, anyways, that is a recap. Sorry, that is a recap of all of the trades that I took this week. Let me know if you guys like this new mic. I reckon it's pretty sick. But yeah, in the terms of the future, I'm gonna try stop just trading off fair value gaps. Well, I'm gonna need more confidence of trading off fair value gaps. But yeah, I just need to keep improving my game, keep improving my edge. Shout out to who's the bro? Where's the brother? Fuck. The Flow. Stop taking fair value gaps entries. Everybody, yeah, even I was talking shit back to him, bro. But this guy's right. I think I gotta wait for more high probability entries before I just take stupid trades. But to be fair, this was a fair value gap entry. It was a slapper. AU, bit of a shit entry. But yeah, anyways, guys, this is my first video recording with this new mic. I'll do a weekly bias real quick. So, just to give you guys some game, me personally, I want to see. To be honest, if we want to look for the most high probability entry possible, I'm just looking for the most high probability entry possible. I want to see if I'm looking for a trend extension to the downside, to let's say this external draw on liquidity, I want to see price come up, take out this draw on liquidity, fill the fair value gap, give us a market maker sell model, give us power free, give us a Judah swing. I don't really care as long as I can take a short. But if we're expecting the trend to reverse, I'd like to see a market maker buy model where we manipulate this external draw on liquidity right here. We break structure to the upside on the 1 hour at least. I want at least 1 hour confluence for all of the trades that I'm about to take in the future. We buy off a fair value gap or break a block stop loss at this low, targeting this 1 hour draw on liquidity, targeting this 1 hour draw on liquidity, targeting that 1 hour draw on liquidity. It's simple, guys. That's all you really need to look for. And if you don't get these type of setups, then I don't think you should be trading. GBP USD, similar. We want to see a price take out the previous week low and then retrace into, what was that? This daily fair value gap, right? I'm trying to apply these concepts of external draw on liquidity to internal draw on liquidity. So take out the external draw of previous weekly low. After we just took out this external draw, so we should retrace into the daily fair value gap. We should retrace into the inverse weekly fair value gap. And what do you guys also recognize? AUD, AUD, bro, I'm tripping. AU and GU, both of these are USD pairs. They both move the same, so they're probably both most likely to go up there and trend together. But for my other pairs, Euro, Japanese yen. What did I look for, bro? Fuck. I put in the Discord. Hold on. Euro, Japanese yen. Yeah. So we recently took out this draw on liquidity, and we filled a fair value gap. So I said we had another 1 hour fair value gap. I wanted to see a market maker sell model off this fair value gap to continue to this lower fair value gap. And then did I get rid of the UJ bias as well? Nah, we got the UJ. So UJ is similar to the Euro JPY, but the thing is on UJ, we got previous yearly highs. So on the yearly time frame, we have previous yearly highs. Now, I don't know if price is about to make another previous yearly high off this previous daily high, because I'm thinking if price wants to come up and take out this previous daily high, surely they want to take out the previous yearly highs. But for 2 years, if they've made 2 consecutive previous yearly highs stacked on top of each other, what's the chances that this is another previous yearly high that's just going to be stacked, like triple? But anyways, we took out the previous daily high, so I'm looking to be bearish for the next foreseeable future. We're breaking structure to the downside on the 1 hour. I want to see this level of buy-side liquidity get taken out. I want to see this 1 hour fair value gap get taken out, which could give you a very high probability market maker sell model. I want to see price displace past this bullish 1 hour fair value gap, retrace into it as an inverse. And we're going to target this previous daily low, and we're going to target this 1 hour fair value gap, and then we're going to target all these draws on liquidity that need to be taken. because if you guys don't realize, we were inside of a market maker buy model. We took out this level of sell side liquidity. We have this big fair value gap right here. Price distributes, takes out this high right here. This was the previous weekly high. So now we could start looking for shorts on a smaller. Yeah, we could start looking for market maker sell models. We can start doing this, doing all that. But yeah, I want to start to look for downside trades. But if not, we could easily just wait for price to target these highs, and then we could be in an even better market maker sell model. But I reckon, yeah, we just gotta let time and price play out. But yeah, that is my weekly bias and all the trades I took this week. I hope you guys enjoyed the video, and I'll see you guys later. Alright boys, sorry I forgot to show you my final trade. What the fuck? I forgot to show you guys the final trade that I took. Completely forgot about it, but we'll just go over it real quick. So basically, I don't trade UJ, but I was like, oh my gosh, we're so high to these previous weekly highs. Oh my gosh, we're going to target it. So I thought we were bullish on the daily. We were bullish. We were breaking structure right here. We had that fair value gap. Now, obviously, you guys have seen my weekly bias, and now you think, now you know that I think it's going to go bearish. But at the time, I thought it was bullish. I thought it was going to target those highs. But yeah, to be fair, we did take out previous daily high, which was against us. But other than that, we were holding a 1 hour fair value gap. We did have a big fair value gap. Below our stop loss. So that's not great. But we can see that we're holding this 1 hour fair value gap. Now this is when I started to just learn about internal and external draws. Now I thought, oh my gosh, we've hit this internal draw. Now we're going to come up and take out this external draw. Now, to be fair, it did happen, but obviously it wasn't a great trade to take. So what I did was I recognized, okay, cool, this is potentially a level of sell side liquidity. We got a 15-minute break, like somewhere along here or some shit, I can't remember. But we had a 15-minute break. Yeah, it was right here, way lower. Pardon me. But yeah, 15-minute break, holding a 1 hour fair value gap, took out a level of sell side. It's like a shitty market maker buy model. Like, this would have been better if it was all the way down here at, wait, where's the fair value gap? It would have been better if it was at this fair value gap and it taken out this low and then it created a market maker model. That would have been a much better entry. But for this one, bro, we barely get displacement, and you want to enter after you get like displacement past these highs. But I didn't enter there. I entered off this inverse 5. I bought after like a 1 minute fair value gap or some shit, hit that, had like a shitty risk rewards, had to put my stop loss here, got one take profit, and then yeah, so that was the other trade I took this week. And you guys saw which trade I should have taken. The only trade I should have taken this week was GU. But yeah, that is the final trade I took this week. I'm in a little bit of drawdown right now in my funded account, so I'm gonna have to be patient to practice not trading unless it's really high probability, and practice using the right risk management, as well as looking for good risk to rewards. So hopefully I can get out of drawdown and hit the profit targets needed to like actually validate and build confidence in myself that I can actually start a real 25k account and get a payout on that. Because I've got one waiting with the Forex fund that's just chilling, it's just sitting there. And yeah, I'm actually really keen to trade, but obviously you shouldn't rush the process. You shouldn't try to like force it. You shouldn't try to force getting rich. The only thing that will do is build bad habits, in my opinion. I think you just need to focus on building the good skills and maintaining good habits. It's like that saying, God's timing is the perfect timing. But yeah, anyways, guys, that is the end of the video. I am liking using this new fucking microphone. I reckon it sounds pretty sick. Elgato Wave 1, shout out to the guy who gave it to me. But yeah, that's the end of the video.